Hi, I'm Saeed from Nile & Co. Chartered Certified Accountants and Tax Advisors on Saturday, the 30th of May. In this video, we'll try and make sense of the recent updates announced yesterday by Chancellor Rishi Sunak regarding the extension, withdrawal and tapering of the furlough scheme. But before we dive into it, if you're here for the first time, please subscribe to this channel to get the recent updates, tax tips and short videos on self-assessment, corp tax, VAT, pension, CGT, IHT, R&D, due diligence, cash flow business forecasting, just to name the few. Rather than talking it through and throwing lots and lots of figures and percentages to you, which might come across as quite random, I thought the best idea would be to illustrate the changes in the tabular or chart form, and take my word on that, it's not as complicated as it looks like. So let's get started. Right, so as we all know, the scheme was launched back in April, 20th of April, if I recall correctly, but it was backdated to 1st of March, and initially it was only launched for 3 months, that is March, April, May. It was then extended by a month to June, and it was then further extended by 4 months to October. So the total furlough scheme is going to last for 8 months in total, that is from March to October. Obviously, there are going to be certain changes in those months, which we would discuss shortly. So the scheme was open for full-timers, part-timers, agency staff workers, zero-hour contract workers, flexible workers, but I'm not going to go into the details of eligibility criteria today, because A, it's a very old topic and the chances are that whether you are an employee or an employer who has some furloughed employees on your payroll, you would have dealt it by now. And B, it's not part of our topic today. But by all means, if you have any questions or concerns, leave us a comment and either me or one of my staff members would respond to that as swiftly as we practically can. So in March to June, the government paid 80% of the furlough wage up to the maximum cap of 2,500. The company did not have to contribute anything whatsoever towards the gross wage. Not only towards the gross wage, but also the company was not required to contribute anything towards other associated costs like employers' national insurance or employers' pension contribution, as those two items were also covered by the government in the grant. Therefore, the effective cost for a business to keep an employee on their payroll was nil because everything was covered. A small disclaimer on that though, the company would still accrue the holiday leave of the furloughed employees if they have a furlough any employees. In these months, no furloughed employee was allowed to come for a part-time work, and there was a huge outcry in that regard, including some of our clients. If you see, the assumption of that was that either your business is operating at the 100% level or it's all doom and gloom and you have simply closed down, shut down your business and you have furloughed all of your employees and all that. However, in reality, there are so many businesses who fall in between these two extremes and they wanted some of their employees to work on part-time basis. However, they couldn't ask their employees because in that case, they were not allowed to furlough them. So in March to June, the employee who has been furloughed would still receive 80% of his or her gross wage. In July, pretty much everything remains the same with regards to the contribution from the government and the company. However, there is one huge change that from 1st of July, the furloughed employees can be asked by their employers to come and work on part-time basis. And the furloughed amount would then be reduced in proportion to the time not worked in their jobs. As you know that the announcement was only made yesterday, we are yet to receive the detailed guidelines about the mechanics and calculation of the furlough wage for part-time workers. I'm expecting to receive some additional details on this area sometime early next week from HMRC or Treasury. And as soon as we do, we would definitely update it on our Facebook page. If you've not already liked it, please do so. You can find the link in the description of this video. But with whatever limited information we have, let's try and work out a quick example of that. So say for example, you have a furloughed staff member whose gross wage was £1,000, which means that at this point in time, the furloughed employee must be getting £800, which is 80% of the gross wage. Now, say for example, the furloughed employee has been asked by the employer to come and work for at least 25% of their normal time allocation, which means that now the wage calculation would be the company would have to pay 25% of gross wage, that is £250, and the furlough amount would also be proportioned in accordance of time not work. So that would be 75% of 800, that is 600. So altogether, the furloughed employee would now receive £850 after working 25% of their normal allocation time, in comparison to £800 without working anything whatsoever. But again, these calculations could be subject to change once we receive further guidelines from HMRC. Okay, so let's see what we have in August. So in August, the government would still contribute 80% of the furloughed employees' gross wages up to the maximum cap of 2,500. The company would not be required to contribute anything towards the gross wage of the furloughed employees. However, in August, the employer would start contributing towards the employer's NI and employer's pension. So August is going to be the first month where things would start becoming a bit exciting, and the total, the average representative effective rate of such contribution is calculated at 5%. The part-time work would still be allowed, so you can ask the furloughed employees to come to work on part-time basis, and the employees would still be able to receive 80% of their gross wage. From September, the government would expect companies to shoulder the burden of furlough scheme and start chipping in towards the gross wages of furloughed employees too. So in September, the government would contribute 70% of the gross wage of furloughed employees up to the maximum cap of £2,190, which means that 10% of the gross wage would be contributed by the employer or the company or the business, and the NI and pension would also be contributed by the employer. Taking all these contributions into account, the average representative effective rate has been calculated at 14%, but I wouldn't worry too much about it at this point in time, because obviously it all depends on your workforce and what's the gross wage of your individual employees and the rest of it. Again, the part-time work would still be allowed for furloughed employees. The employees would still enjoy full 80% of the gross wage. And this brings us to the last month of the furlough scheme, which is October, where basically the government would be asking employers to contribute even more, that is 20% of the gross wage of the furloughed employees, and the government would only be contributing 60% with a maximum cap of 1,875. The rest of the things are pretty much the same. NI pension to be borne by the employer. Furloughed employees would be allowed for part-time work. The employees would still get 80% of the total gross wage. The effective representative rate, considering all of these contributions, would be 23%. Okay, so now we know in a nutshell that who would be contributing towards the furlough scheme, how much will they be contributing, who would be bearing the NI and pension, what would be the effective representative rate, whether the furloughed employees would be able to work on part-time basis, and how much staff would be receiving. But what exactly do these figures mean? And what, as business owner, you should take from these figures and deadlines and thresholds and percentages? So let's try and talk about it. To make these figures more meaningful, let's think of a business which has been hit pretty hard by the pandemic, be it in retail, tourism, or hospitality. And when the lockdown restrictions came into place, the business activity literally stopped and the business stopped turning over anything. At that point in time, the logical decision would have been to make some redundancies. However, in that particular time, Chancellor Rishi Sunak requested this type of business, almost begged not to make any redundancies, instead keep all the workforce on the payroll, and the Treasury would foot the bill for that. So this particular business owner was okay with that arrangement. The reason being that he was not bearing any costs of the employees in terms of gross wage or NI and pension. So everything was pretty much hunky-dory. Fast forward to August, the business owner would contribute towards the NI and pension of furloughed employees. And in September and October, the business owner would contribute 10 and 20% respectively towards the gross wage of the furloughed employee. Now, the tricky question is that if the business activity does not pick up, or the business activity does not pick up to the same level as before, would you still keep those furloughed employees on your payroll and contribute towards their wages, NI, and pension, knowing that they are not working, they're sitting at home, and they're not contributing to the business activity? The answer to the question is that I am going to give you a 4-step procedure which you must follow in order to avoid any additional costs, any additional unnecessary costs, should I say. So the step number 1 is that you must forecast your business activity. What do I mean by that? I mean, without going into the details of the GDP and growth and stuff, you should try and anticipate or estimate your business performance for the next few months. By the way, this assessment would only be done from 1st of August onwards, because till 31st of July, even if you have furloughed employee on your payroll, it doesn't bother, or it shouldn't bother you, because it doesn't cost you anything. Everything is being paid by the government, including NI and pension. From 1st of August, it would start hitting your pocket. When I say your pocket, business pocket, and that's where you should start getting a bit concerned. So, as I said, step 1, forecast of business activity. The examples I can give you in that area is that, I mean, if you work on a long-term contracts, have a quick look on your diary and see what sort of contracts are available in the next few months. Try and see the status of your existing customers, and whether they are staying afloat. What are the chances of gaining new customers once the businesses start opening up? What are the chances of losing your existing customers? If you rely on the footfall, try and estimate as to by how much percentage the footfall is expected to go down, and how it should impact your turnover in business activity. Using all these type of things, you must anticipate, you must forecast the business activity from 1st of August onwards, and see what sort of turnover would you generate, what sort of income, like profits, can you make from 1st of August onwards, excluding wages, obviously, because that is not relevant for our calculation. Right, step 2 is the assessment of your furloughed workforce. If you do not have any employees as of 31st of July, I apologize, then obviously it's curtains for furlough. You don't have any furlough, so there is the conversation ends right there. But if you do have certain employees on furlough till 31st of July, then you need to make a detailed assessment of all the workforce which is on the furlough. When I say the assessment, it includes you should prioritize, or you should categorize the employees into key employees, department-wise maybe, and see which employees are absolute necessity of your business, which employees are key to your business, and what are their wages, what are their NI contributions, what are their pension contributions, and how much is going to be their wage contribution from September onwards. So that was a step 2. The step 3 is the main step, which is making decisions based on the conclusions arrived at step 1 or 2. That is whether you can, or the business can, afford to keep furloughed employees on the payroll and keep contributing towards their wage and NI and pension. Now, if the decision comes out as yes, the business can afford to keep those furloughed employees on the payroll by contributing towards their wages and NI and pension, then good luck. Fingers crossed, hope for the best. However, if the decision comes out as no, then you must do something pretty quick. And why do I say that? Because you do not have that much time as you might think. Look, let me show you something. So there is no point in making someone redundant in October. Or let me rephrase my sentence. It's not ideal to make someone redundant in October. The reason being that you would have already paid 30% of their gross wage and 3 months worth of NI and pension in October. If you are considering to make someone redundant, and although it may sound as if I am advocating for redundancies, but I'm not. I'm just trying to make sure that you do not incur any unnecessary additional costs. So if you have considered that yes, the business cannot afford to keep furloughed employees on the payroll post 31st July when it would start costing yourself some money, then the ideal date to make those redundancies is 31st July 2020. Now, if your redundancy date is going to be 31st of July, then most of the contracts do have a notice period of about 4 to 6 weeks, which means that for those furloughed employees which are to be made redundant on 31st of July, the notice should be served by end of June in case of 4-week notice period, and by mid of June in case of 6-week notice period. And as you watch this video, you only have a couple of weeks until mid of June to serve the notice for the redundancy. Lastly, something very briefly for employees. Look, we've had 9/11, we've had 2008 credit crunch, but never in the past the state has paid for employees' wages. So they've definitely got a cracker of a deal, no two ways about it. However, I wouldn't be surprised to see a significant amount of redundancy notices coming through their way over the next few days and weeks. This is all what I had. I hope you liked the video. Thanks for watching.